Hi traders. Today's question is a very pertinent question. It comes at a time where ETFs are in the news virtually every single hour of the day. And so it's quite natural that the question I received multiple times last week was, Oliver, what is an ETF exactly? Can you explain? And so today I'm going to tackle this most pertinent, this most important question. What is an ETF? So the first thing I will say is, in its most simplistic form, an ETF is nothing more than a paper version of an underlying asset. So what an ETF stands for, first of all, is Exchange Traded Fund. And it's a convenient vehicle that allows people to buy into an asset class or a commodity or a group of investments in one simple way. So, as an example, if you wanted to expose your capital to the airline industry, you wanted to spread your money across a variety of different airlines, you could more conveniently accomplish that by buying an ETF that focuses on the airline industry. And so by buying an airline ETF, you would be gaining exposure to a multitude of airlines by simply buying the shares of the ETF. And so, in a way, an ETF is a convenient way to paper an asset. The same way that the US dollar came into existence to paper the underlying asset gold. Because gold wasn't extraordinarily divisible and it wasn't so convenient to do day-to-day transactions, the dollar came into existence, a piece of paper that was designed to represent the underlying asset called gold, but to make it more convenient to do day-to-day transactions back and forth. But at that particular time in history, that paper dollar represented an actual piece of ownership of real gold. Today, we know that's not the case. And today, the US dollar is a fiat currency, which means that it's not backed by anything. Well, the ETF takes us all the way back to a time when paper assets were supposed to be real representations of underlying assets. And so when you have an ETF, a gold ETF, when you buy the shares of a gold ETF, those shares, that paper representation called a share, represents an actual ownership of the underlying asset, or it's supposed to be. And so ETFs have served as convenient ways for regular individuals, retail clientele, as well as institutions to gain exposure to an underlying asset that's not all that easy to buy itself. So a lot of people consider buying gold very inconvenient, storing gold, paying for the insurance. Instead, they would rather buy an ETF that represents the ownership of gold, such as GLD. That is the most popular ETF for gold. Well, why this subject is extraordinarily important today is because Bitcoin had a very historic event last week. The first ETF for Bitcoin was approved by the SEC, the Securities and Exchange Commission. Now, the reason that's important is because Bitcoin has been dogged over the past 12 years by two dominant fears. Number one, the fear that China controlled the vast majority of its mining and its hash rate. That fear is completely gone now because of China's recent ban of mining in the country. And today, the vast majority of mining and the vast majority of Bitcoin's hash rate is now in the United States. So never are we to ever have the concern connected to Bitcoin that the majority of the mining is occurring in China. Number two, Bitcoin has been dogged by this notion, by this perpetual fear that the US government in particular was going to ban Bitcoin. Well, that fear is now dead forever. Why? Because last week, the US government, a division of the US government, the Securities and Exchange Commission, gave a green light to Bitcoin's first ETF. Now, this ETF is futures-based, but it's still a very big step toward the ultimate step of getting a true spot-based ETF that represents the actual ownership of Bitcoin. And so we can never again allow the fear of government banning to ever affect our decisions when it comes to Bitcoin. But getting back to the ETF, when Bitcoin ultimately gets a spot-based ETF, what this will give exposure to is a paper representation of actual ownership of Bitcoin. So it will offer individuals the ability to gain exposure to the physical asset without going through the steps of buying the physical asset and storing the physical asset, protecting the keys that lock down the physical asset. They'd simply buy an ETF that represents ownership of the asset. Now, I'm absolutely certain that the follow-up question to this is the indirect ETF ownership of an asset better than the direct ownership of the asset? Well, it depends on the asset, but generally speaking, I would say no. That there should be, in a sense, for serious investors, no substitute for actually true, unadulterated ownership of an asset that you consider to be valuable. So as it relates to Bitcoin, I consider that to be one of the most valuable, if not the most valuable asset on planet Earth today. And so I would not want a paper version of the asset. I want the actual asset. And while I believe that an ETF or Bitcoin is extraordinarily bullish and will bring tens of billions of dollars into the ecosystem, I personally will not be taking advantage of it. I believe that the actual physical ownership of the asset is far superior than a paper representation of the asset. And a lot of games can be played in the paper game. So that you can produce more paper than there is the underlying asset. So you can produce 200% more paper than the underlying asset. And that's traditionally what's happened in the gold space. There is far more paper ownership of gold than there is gold that has been mined above ground. And that's an issue with these paper versions of the asset. All right, so there you have it, guys. In a nutshell, an ETF is the paper version of an underlying asset or an underlying group of assets. It's convenient. It's better than nothing. In my opinion, it's better to own the underlying asset that you have an interest in. But if owning the underlying asset is a pain in the you-know-what, if it's very inconvenient, if you don't know how to own the underlying asset, or you legally can't own the underlying asset, but you can legally own the paper version of the asset, then ETFs are better than nothing. There you have it, guys. Do further research to learn some of the additional intricacies of an ETF. They're useful, but you know my feelings. Own the asset. Owning the asset is better. All right, traders, I hope this has been somewhat informative for you. Keep those questions coming, and I'll keep the answers coming. Until next time, trade well. Ciao for now. Boom!